Bro, Nifty tried to break out earlier in the previous week, then today it suddenly collapsed. A brutal intraday sell-off erased previous session strength and left traders asking, was that a failed breakout? Or did someone flip the market into a trap? In the next few minutes I'll show you exactly why the market crumbled, where the real pressure came from, and the two levels you must watch for tomorrow. Welcome back to Wealth Maama, your no-nonsense evening market decode. We're doing the full breakdown of today's market structure, global and domestic triggers, sector flow, the biggest winners and losers, VIX clues, and the exact support resistance zones you must track for tomorrow. Today Nifty opened around 26,159, tried to hold early gains, but weakness set in after the mid-session. The index fell sharply and closed at 25,960.55, down 225.90 points, minus 0.86%, a clear negative reversal from the prior close of 26,186.45. Importantly, turnover spiked, volume reached 3,206.83 lakh shares and value hit 31,673.90 crores rupees, showing aggressive two-way activity and heavy distribution into the close. Advances were heavily outnumbered by declines. Only 3 stocks advanced and 47 declined, which confirms the day ended with broad selling pressure instead of selective profit-taking. Why Nifty crashed today? From today's structure and the broad sell profile, 3 forces explain the move. Probable FII institutional selling and profit booking, the extremely high value traded and widespread decline across sectors, with heavyweights taking a hit, points toward institutional distribution rather than a small retail panic. The intensity near the close suggests large participants were trimming positions. Mixed global cues and profit-taking after the recent bounce. The intraday weakness and the late ramp in volatility are consistent with a softer global tone or risk-off ripples. Even if global moves were small, they were enough to trigger exits when domestic buyers hesitated. Domestic rotation and sector pressure. While tech names held up mildly, cyclical and discretionary names were actively sold, and a sharp drop in travel consumer names, Indigo, forced broad weakness. Combined, these domestic dynamics amplified the selling pressure. Put simply, the market moved from a tentative recovery into clear distribution, the kind that turns a breakout attempt into a failed breakout within the same session. Sector-wise performance. Sector action paints the clearest picture of today's internal damage. IT names such as Tech Mahindra, Wipro, HCL Tech were the only green spots and acted as short-term safe havens, but they lacked the firepower to carry the market. On the other hand, cyclicals and large discretionary names, led by metals, autos and consumer, were heavily sold all day. Indigo crashed hard, and marquee names like JSW Steel and Nestle ended deep in the red. This divergence, narrow leadership in IT versus heavy selling in real economy-linked stocks, is precisely why the breakout attempt failed. The rally had no breadth. Top gainers of the day. Only 3 stocks that are in green for today crash. Tech Mahindra, plus 1.22%. Tech Mahindra held up because money rotated into defensive tech names as sellers exited cyclicals. It acted more like a safe pocket than a leadership signal for the whole market. Wipro, plus 0.35%. Wipro saw modest buying, likely from short-term funds seeking refuge in large-cap IT. The move was shallow and didn't pull other sectors up with it. HCL Tech, plus 0.12%. HCL Tech was barely positive, suggesting residual IT strength but no convincing accumulation. This limited tech support couldn't offset the broad selling elsewhere. Top losers. Indigo, minus 8.62%. Indigo crashed spectacularly, nearly 9%, with huge volume. That's a major intraday shock. Airline-specific concerns and heavy selling there created a contagion effect, dragging travel names and the broader market lower. Bharat Electronics Limited, minus 4.92%. Bharat Electronics Limited's sharp fall shows targeted selling in select PSU or defense-related names. When even traditionally defensive PSUs drop steeply, it signals aggressive risk reduction by institutions. JSW Steel, minus 3.71%. Metals were sold as commodity-linked sentiment turned negative during the day. JSW's weakness is consistent with broader cyclical de-risking. Nestle, minus 2.56%. Even large FMCG names were sold, indicating that rotation hit defensives too, not just cyclical stocks. This underlines the breadth of the sell-off. Shriram Finance, minus 2.52%. Financials seeing weakness shows the selling reached credit-sensitive pockets as well. This further reduced confidence across the market. India VIX. VIX jumped to 11.02, plus 6.79%, a strong spike in expected volatility. This confirms what the price action showed. Fear returned into the market, especially into the afternoon. A rising VIX alongside a falling index is classic risk-off behavior. It tells us the market is now pricing in higher short-term uncertainty, so traders should reduce leverage and watch for fast moves. Support and resistance levels for tomorrow. Support 1, 25,850. This is the immediate floor. A break below would signal continuation of today's downside momentum. Support 2, 25,730. Deeper structural support. If price falls through this, expect larger stop runs and faster selling. Resistance 1, 26,130. A reclaim and close above this would be the first sign that buyers are stepping back in. Resistance 2, 26,300. Only sustained recovery above this level confirms a renewed breakout attempt. Bro, tomorrow is a make or break day. Two outcomes will define the flow. Bear continuation scenario. If Nifty breaks 25,850 decisively with volume, we are likely to see quick follow-through selling toward 25,730 and beyond. In this case, today will be remembered as the day the breakout attempt failed and distribution accelerated. Reclaim and short squeeze scenario. If the index stabilizes and reclaims 26,130 in the first half hour with decent volume, traders could see a relief bounce and short covering into 26,300. But be careful. For any meaningful bullish confirmation, we need breadth, more sectors participating, and a falling VIX, neither of which we saw today. Bottom line, volatility is up, leadership is fractured, and the market will reveal its next direction early tomorrow. Trade smaller sizes and wait for confirmatory closes. Bro, today's failed breakout and rising VIX makes tomorrow a critical session. Don't be impulsive. Watch the two levels I gave, watch sector breadth, and respect the spike in volatility. If you want the exact aftermarket levels and a short-term watchlist tomorrow morning, hit like and subscribe. I'll post the update early. This is Wealth Maama. Keep your risk tight and your mind calm. See you again in another video.